Thank you for joining us. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwawo. Coming up on the show, Vivo Energy makes London Stock Exchange debut with a valuation of nearly £2 billion. Uganda's PMI slows, while Kenya's index jumps further in April. Plus, all is set for the African Development Bank's 53rd annual meeting later this month. Let's get the show started now with the markets. And here on the African continent, the markets were mixed at intraday. The Nigeria All-Share Index was up 0.27% at midday, while the JSE Index was also 0.84% higher. The Egyptian Index ended Thursday's session 1.87% down, with shares across various sectors posting losses of up to 5%. The market is closed today for the weekend, and Kenya lost 0.5% on Thursday. And the Middle East markets are closed today for the weekend. However, on Thursday, Dubai, Abu Dhabi and Qatar all dropped as investors reacted to persistent geopolitical tensions with the risk of the United States pulling out of the Iran nuclear deal looming. The Dubai index lost 1.83%, dragged down by Emma Properties, which shared 3.7%. The Qatar index dropped 1.7%, weighed by blue chips. Industries Qatar was down 0.6%, and Qatar National Bank dropped 1.9%. The Saudi Arabian index was in negative territory most of the day, but closed up 0.1%, as some selective buying for blue chip stocks offered support to an otherwise sluggish market. And the Saudi exchange has eased off from a more than 2-year high hit last week and has been consolidating current levels. And in Europe, the market swung higher in early trade as investors monitored trade talks between the U.S. and China and waited for key economic data. Let's talk to my colleague in Frankfurt there, Ulrich Barth, still waiting to give us details of the happenings today at the European market. Hello, Ulrich. Good afternoon. Nice to see you. Trust you're getting set for the weekend.
Yes, we are here. I am. It's a perfect day here in Frankfurt. The sun's out and it's just a perfect summer temperature out there. It'll probably be a good weekend.
I guess so. Anyway, let's kick off this conversation with Volkswagen's former CEO, Martin Winterkorn, who has been charged in the U.S. with conspiracy in the company's rigging of diesel engines to comply with emission standards. Now, the diesel scandal has reached the very top now. Does that surprise anyone in the market?
It didn't surprise anyone. You know, almost 3 years ago when the scandal hit, already people were saying this is not possible at a company like VW with that leadership culture top down, that the top management wouldn't be involved. Martin Winterkorn resigned, insisting that he's resigning, he's taking responsibility, but he knew nothing of it. Those were lower echelon people, but the people in the know, people who know how Volkswagen was led, that Martin Winterkorn was a stickler for details, that he was involved in almost every engineering decision, or so it was communicated to the outside. People just couldn't believe that he didn't know. So he could be in trouble. He's innocent until proven guilty, of course, until there is a verdict. There are also court cases here in Germany pending. And there are shareholders' complaints pending. And the problem for Martin Winterkorn personally, but also for Volkswagen, is there could be damage claims that hit both of them, the person and the company, if Martin Winterkorn is found to have known more than he admitted at an earlier time. And according to an estimate, that could be up to $10 billion that Volkswagen could be slapped with in such a case. The share is going down on the news today.
Oh. Rich, another hot issue today is the U.S. labor market. Numbers on new jobs have just come out. And looking out behind you there, the Datsun's up at this time. Just wondering if it's already reacting to what the job numbers are saying.
That's right. You're correct in seeing that it's just going whoop, like that. And just at the time that the jobs non-farm payrolls were published. And it is indeed less new jobs created non-farm, namely 164,000, and forecasts were something to the order of 190,000 before. Now, this is still more than in March, 164,000. In March, it was just over 100,000. So the pace has quickened, but March was an unusual month in that there was such bad weather that it affected the jobs market, it affected the economy. This number now means that, yes, there's growth. Hourly wages are also increasing, but not so much, 0.2%. That the Fed would have to, let's say, accelerate their interest rate hikes. And that's both good news for the market, that the U.S. economy is adding jobs, that wages are going up, which is normal for a good economy, but that it's not steaming up or heating up that quickly, that the Fed needs to raise rates in such a way as to break the momentum here in the markets.
And two corporate news on the wires today. Two large French banks, BNP Paribas and Société Générale, have reported results which disappointed investors. Where did they fall short of expectations?
They fell short in their revenues, and they put that down, A, to the high euro, like many industrial companies, also put down performance that fell short in some instances to the high euro in the first quarter. It's since come down, so the second quarter could look different for many companies. But BNP Paribas and Société Générale, the two largest banks in France, they also had trouble in trading. They didn't have as many revenues there. And while Société Générale's profits went up 14%, it had a lack there in that non-performing loans, the provisions for them were reduced, probably to make the balance sheet look a little bit better, and investors just weren't convinced by that. So Société Générale, although the profit is going up, the share is going down just as much as with BNP Paribas, where the profits did go down because of this revenue in trading shortfall.
All right, we'll leave this conversation here. Thank you very much for your time. It's been a wonderful week with you, Ulrich. So enjoy that beautiful weekend.